I'm now with Beth Lunn, one of our accountants who has worked in practice and industry. She also focuses some of her time on VAT, which is similar to GST. So Beth, understanding VAT in the UK, can you explain the basics of the VAT system in the UK and how it applies to foreign businesses, particularly in this case, New Zealand companies?
Yes, I can. The UK VAT system is a consumption tax that's charged on a large number of products or services. We have a standard rate of VAT at 20%, and then varying rates from 0 up to 5%, depending on the product or service. The first stage of VAT registration is to determine what rate your product or service will be.
Okay, so what are the key VAT registration requirements for a company to register for VAT?
Well, the registration for VAT is not automatic. And if you're a UK established business, you're not required to register until your turnover reaches £90,000 in a rolling 12-month period. The rule is different for non-UK registered businesses. The thresholds are disregarded, so they have an automatic requirement to register. The VAT registration does give the business the opportunity to reclaim some VAT back on costs and expenses they may have incurred. The registration itself means that we collate a lot of information and we would guide you through the process, and then we would look to submit the application on the client's behalf. It's worth bearing in mind that the process can take up to 12 weeks to be actioned by HMRC, so we always recommend that they look to register before starting trading activities.
12 weeks, okay, understood. So from a VAT compliance and filing obligation, once registered, what are the typical obligations in terms of filing and payment frequency?
So a VAT registered business would be required to file a quarterly VAT return, although this can be done annually if that suits the business better. The quarters are selected at the point of registration, so this can fit in with the financial periods of the business. And both the return and the VAT that may be due will be required for payment 5 weeks after the end of the quarter.
Okay, all right, thank you. And in terms of preparing and submitting a VAT return for the UK operation, could you just give us a high-level overview of that?
Yeah, so our team would access the client's accounting records. They would review any VAT that had been calculated on sales. They would then look at any VAT that was possible to be reclaimed on costs to the business, and the net amount would be paid over to HMRC. It's worth noting here that also any VAT that had been suffered at customs could be reclaimed at this point. The return is then prepared and filed electronically with HMRC within those 5-week deadlines.
Okay, so for those in the room that might have done any self-research, they might have seen Making Tax Digital, the initiative on VAT compliance. What impact does that have, and what steps should New Zealand exporters take to ensure that they meet these requirements?
So Making Tax Digital requires businesses to file their VAT returns digitally. It gives HMRC like greater visibility on the VAT transactions. In order to meet that requirement, they do need to use approved software. So at Paul Beare, we have the software in place to file those returns and meet the MTD requirements.
Okay, thank you. So regarding VAT on imports and exports here, how does VAT apply to goods imported to the UK from New Zealand and are there any specific rules that exporters should be aware of?
Yes, so the VAT and duties due in the UK will depend on whether you're making your sale to B2B or B2C customers. There's a ruling for low value consignments, which are £135 or lower. In these cases, the VAT is dealt with at the point of sale. For anything over that, particularly B2B, the VAT can be collected using what we call the reverse charge system. So rather than you charge your customer VAT, they're allowed to put it straight on their VAT return, which saves a process step. So this can be set up when you're doing your initial VAT invoicing.
Okay. Can you please explain postponed VAT accounting and how it affects foreign businesses importing goods in the UK?
Yes, so this is also known as PVA scheme, and it means rather than the business have to pay VAT over at the border, they can opt to pay it later on their VAT return, so it's postponed. This can have quite a positive impact on the cash flows to the business, and it also saves time at the border with the products that you're moving. So the only requirement is that that would then be paid later over onto the VAT returns.
Okay, understood. Can you move on to EORI, Economic Operator Registration Identification, and what that is and how we obtain one, please, and actually what it means for a company importing?
Yes, so it's a requirement for the movement of goods into the UK. It's a reference number that also sits alongside your VAT registration, and it allows the business to be registered on the Customs Declaration Service. This is only for people that are importing or exporting. So at Paul Beare, we would look at doing this at the same time as doing the VAT registration.
And it's directly linked to a VAT number, is it?
It is, yes.
Okay. And is there a difference between a UK EORI and an EU EORI? And does a business need both registrations or can one suffice?
Yes, unfortunately, now they need a separate EU EORI number, as well as the UK if they plan to import into other European countries.
Okay, all right. In terms of any potential challenges that a foreign company might face when dealing with VAT and EORI, how can a company be best prepared in order to overcome these potential challenges?
Not being prepared is something that we see a lot. So I would recommend that they get the right registrations in place early. As we've discussed, there's potentially a 12-week wait with HMRC. So make sure that things are in place early before you want to start importing.
Okay, 12 weeks is a bit of a sting, but in terms of compliance then, how can an overseas company stay compliant with the VAT obligations while ensuring any tax efficiency for the UK?
I would recommend that they engage advisors. I think this is a specialist area and any mistakes can be quite costly to the business. So to ensure that all compliance matters are being dealt with properly, consult people that do this on a day-to-day basis.
That's fair. And in terms of our service offering, can you explain a little bit about the services that we provide overseas companies to help them meet their VAT and EORI obligations?
Yeah, we offer full support, so that can be from the initial discussions about where they want to take the business and what their plans are, all the way through to the compliance registration and ongoing support in reporting and filing.
Okay. Thank you. And it's fair to say that we would offer a 30-minute free consultation to advise appropriately generally before being instructed to consult specifically. Can you kindly give us any examples of how we've helped other companies meet their VAT obligations in the UK?
Yeah, we've assisted many companies on their journey, and those that come under the controlled imports ruling of alcohol and tobacco, through to non-controlled imports.
Okay. And finally, what steps would you recommend for a New Zealand company to take before they start trading in the UK in terms of ensuring fully compliance?
I would suggest they familiarise themselves with the requirements, plan the applications early, and where possible consult advisors, most definitely.
Okay, that's great. Thanks very much, Beth.
Thank you.